Joining us now is Stephen Roman, the chairman, founder, president, and CEO of Global Atomic. Thanks for coming in today.
Mark, very nice to be here. Thank you for inviting me.
Those are a lot of titles.
They are.
Yeah.
Yeah.
You change the ink in the printers too, I guess?
Yeah, sometimes, and I do office cleanup and whatever's required.
Excellent. Very good.
You know, sorry, I was just going to say, when you start something from scratch, you're the only guy in the shop. So you pick up a lot of these titles and you do a lot of the work.
I'm sure, yeah. And we're going to get to that towards the end of this conversation, the long journey that you've been on here with Global Atomic for about 17 years now. So your company owns 80% of the largest, highest grade uranium project in Africa, in Niger specifically. You've hit major milestones. You've got more to come as you head towards production in early 25. So give us a brief overview of where you stand right now.
So right now, we've begun the ramping as of November the 5th, and that's proceeding. We're still getting supplies in from the port of Cotonou. They come through Niger and through Agadez and then up to site. So we're still receiving a lot of equipment, including bolts and fans and screens and everything you need for mining. But the portal's been cut. That's now all being shaped, and we're starting the underground ramping at the moment. The camp has been built, so we've got probably close to 150 people on site right now. We've, of course, put out a big recruitment program for local people, and that's countrywide. So we recruit people from the capital, Niamey, but also in Agadez and in Arlit and all the surrounding regions. We have apprenticeship programs on the go right now with people as young as 18 years of age that come, and we've hired them to actually learn the business and learn how to move through things. And we've also hired a number of people from the old Cominac operation of Orano who are very experienced with this type of underground mining. So we've got a complete complement on site right now. And we expect the ramping will continue for the next 4 to 6 months until we start hitting the ore body.
And that, what you said there about hiring locals and the mentorship program, that goes to your comments that we were ESG before the term was even invented, and we'll discuss more about that in just a while. But in terms of catalyst, you've got a lot of them coming up this year, including project financing, which you hope to have complete sometime end of Q2. You've said that you're down to the short strokes with a couple of North American banks. Can you update us there? And have you determined how the financing is going to be structured?
So one of the banks is the EDC from Canada. So they've committed to supplying $75 million US to the loan. We've got another large institution bank that's going to be partnering with them. They don't want us to release any names at the moment until they clear all of the paperwork and they have a board approval to proceed. Due diligence is pretty much completed. I'm getting another visit over shortly. I'm leaving for site on the weekend with the final group of bankers, and that should really get things moving once they're finished all of that, and we should have terms announced before the end of Q1, I would expect. Right now it's looking like a 60-40 debt equity deal, so that's the way it's shaping up. Of course, we don't know what the interest rate will be at the moment, but everything's proceeding.
Very good. So you completed a 16,000 meter drilling program. You hope to have a resource estimate, a new one, out in Q1, and you've said that you expect a big bump from the previous estimate for phase 1 and beyond. So how will the new resource estimate impact the economics of the project?
Well, the drilling was very successful. So we had some excellent drill holes, previously unknown, very high grades, and we did a lot of upgrade drilling. So we moved a lot of inferred resources to measured and indicated, which you need to wrap a feasibility around. So the idea is to come out with that new mineral resource estimate by the end of this quarter, and then over the following quarter to actually do a new updated mine plan. that'll show how the phase 1 area has been expanded. So right now, phase 1 is a 12-year mine life. It's about 20% of the overall ore body. So people need to keep that in mind. This is actually just a starter mine. The great thing about it is the flank zone came close to surface, so 70 meters down we hit the top of the ore body, and we can get into ore very quickly. But because of all the additional drilling, we should be able to expand the areas around that flank zone, so zone 2, zone 3, which you may recall in the feasibility study we had pushed out to zone 4 and zone 5, which is 2 kilometers down strike. And the mine plan at the time envisioned all of the underground development needed to get out to those far-reaching zones. Now that we've infilled all of this, we'll be able to move, let's say, either call it phase 1 or really phase 2, much closer to existing infrastructure without all that underground development, which should reduce our overall operating costs and bump the 12 years out quite a few more years. I don't want to make any predictions at the moment.
We won't hold you to that.
But I think it'll be a significant increase.
So you want to start construction in Q2, and you touched on some of the work you've already done and accomplished. Anything else you want to add there?
Well, Q2, of course, the big I guess, catalysts are going to be completing the bank financing, doing the new mineral resource estimate, updated mine plan. We also expect that Orano is going to be visiting our site to go underground and see that we are on track for delivery of ore. If you might recall, we have an MOU with Orano to ship them ore right from the mine to their Sommer plant. So we met with them in December, and basically the idea was, they'd like to see that we're progressing. Similarly with utilities that we're talking with that would like to sign up additional offtake agreements with us. They want to see that the whole financing package is done. And I think once you see that done, there's going to be a bunch of catalysts come right after that as people say, okay, this thing's going ahead, they're financed, boom, now we can sign up. We want ore deliveries up to Sommer, we want yellow cake deliveries to utilities, and that's really going to put us on the map.
Right. And you already have 2 offtake agreements, which you say is unusual for a greenfield project. One of them is now definitive, and that's $140 million in value to Global Atomic. Is the other one definitive as well?
The other one is just now we're finishing the legalese on the definitive agreement. That should be coming anytime.
And what do these stamps of approval mean, do you think, for people looking at the company?
Well, for people looking at the company, and it's unfortunate we can't mention any names of who we signed with at this point in time. Hopefully at some point we will. But these are major utilities that have done a thorough due diligence, and of course with doing that due diligence, seeing this project and the way it's shaping up and the grade and the size of it and the longevity of it, they want to have another secure supply, because really in the world you got the 3 big players, Orano, Cameco, and Kazatomprom, and then a bunch of little guys, but there's not enough optionality to utilities on where they buy their uranium. And of course, with Russia now being sort of taboo, a lot of these utilities have to look somewhere else. So it's looking very good for Global Atomic that this is going to generate more business for us.
Stephen, you have a cash-flowing zinc acid. You've had that for a while, and you said it was very helpful, especially when it was hard to get financing and during lean years. But you've also hinted at the fact that maybe the timing may be right soon to sell that asset, use the proceeds towards the project. Can you update us there, and what would be determining factors to do that?
Well, really, Mark, we don't want to sell the asset. I think it's a great asset that what I'd really like to do at some point is spin it out to shareholders as a dividend producer that, could run like an annuity. Because this is a brand new plant we have there. It's good for the next 50 years as long as there's a steel industry in Turkey it's going to be providing a very valuable service because we clean up their waste and produce a value-added product in a high-grade zinc concentrate. So the idea is not to sell it, of course, and the cash flow, the banks currently, they like the fact that we have an operation with cash flow. Because, you know, if you have to make an interest payment, maybe you get the cash from there. If you don't have it from there, I mean, it gives you some optionality. So clearly people have asked me that this doesn't really fit with that. And the uranium is going to be so much bigger than your zinc operation. Why would you want to keep it? Well, you know, we've just gone through a pandemic. The zinc industry is a little bit low right now, the steel industry. So the mills in Turkey are running at about 70% capacity. We'd like to see them back up to 80, 85. Then we'll be able to run our plant full and make 60 million pounds a year of zinc from there. So, of course, that's split between us and our joint venture partner. However, now's not the time to sell it. Bottom line is because we'd like the market to be a little bit better.
All right, very good. Nice detailed answer there. Let's get back to ESG. As I said, you've said we were ESG before it was even a term. You mentioned how you work in the local community, for example. 35% of your power needs are renewables. On the renewable side, do you see that number going up over time, over years? That percentage will go higher?
I think that could very well happen. Right now, we've made a commitment to buy power from the local grid. So there's a power plant there, a company called Sonichar that's supplying power to Agadez and Arlit and surrounding communities. The power line goes right over our property. So it makes sense to actually buy power from the local grid. The government would like us to do that, of course. But we want to integrate solar and battery backup and any other things we can do there. For instance, all of our underground mining fleet will be converted all to electric. So as we move along and out of cash flow, as we continue to optimize the operation, we would really like to put in as much renewable as possible. I even suggested, for instance, wind, because you do get some decent winds in the area, is why not put up a 5 megawatt wind turbine? Well, so that needs to be studied, needs to be costed out. It's something that we would do on an ongoing basis.
As far as the stock, you've said it's trading around $2 a pound, and you say that undervalues Global Atomic compared to peers. So what is it the market is not understanding about the opportunity, do you think?
Well, I think the fact that it was in West Africa, maybe in Niger, with security issues in the region, people were just a little bit nervous of putting all their eggs over there. But really, I think Niger is a big supplier of uranium to the world. France gets 30% of their supply from there. This is a very strategic region. It's the Timor-Soy Basin. It's like Canada's Athabasca. And the government views it as a strategic asset, and they protect it with everything they have. So it's a big revenue generator for the country. But to answer your question, I think that might have been one of the reasons where we were undervalued compared to peers that were mainly in Canada. Of course, Canada, Saskatchewan, Athabasca is the number one jurisdiction globally for people looking for uranium companies. But I think as we continue to hit our milestones and we move into production and people can see that we're supplying uranium to big Western utilities and European utilities and Asian utilities, that's going to really start waking people up.
Right, and the market will catch up.
I think the market will catch up. I mean, right now, you know, we're a fully permitted project going into production, and we're valued less than projects that are not even permitted. So that doesn't make any sense.
Right. Now, going back to this journey you've been on for about 17 years now, you start this company. Here you are now with an advanced project. You talk about the renaissance in nuclear and uranium. You've got those tailwinds. So if and when you ever take a step back and reflect, what do you think about? What do you think about the journey that you and your team have been on to this point?
Well, you need a lot of perseverance. In 2007, when we signed up our permits, uranium was going up, and in 2007 it hit it hit almost $140 a pound. So there was big interest. Of course, I incorporated the company in 2005. We spent about 18 to 24 months looking through old data in Niger. The country was just opening up for new foreign investment. So in 2007, we raised a bit of money, and then uranium prices came off because of the financial crisis, 2008. But we had enough to really keep going, and then it started coming up again, the price in 2010, 2011, and then Fukushima hit.
Right.
So that was the number 2 big bugaboo, and of course, for 10 years, nobody was investing in uranium projects, and the price went down, and all the equity money dried up. However, at that time, right at the time of Fukushima, JP Morgan, Macquarie Bank, Investec, they all came in, put in $25.5 million. We were a private company at the time, and the thought was to go public right away, but then Fukushima happened. So, we got hit with these big whammies, being the financial crisis, then Fukushima, and then, of course, recently COVID. And we really managed to keep it going with the limited amount of equity money we had, and then, of course, merging in 2017 with Silvermet, another company I started in 2005. And that really gave us the cash flow from the zinc operation to really keep advancing DASA until markets got better. So that's how we ended up here. And I'll tell you, it was very difficult when there was no interest in uranium for 10 years to keep everything hanging together, keep the work going, keep the permits in good standing, and government relations in good standing, so that we didn't lose the project.
And you've come out the other side.
We've come out the other
and
side.
overcome all those obstacles.
That's it.
Amazing. Great stuff, Stephen.
Thank you very much, Mark.
Okay, we'll talk to you again.
All righty.
All right, Stephen Roman, he's everything at Global Atomic. Chairman, founder, president, CEO.